I've been doing a lot of studying on retirement insecurity as well as Social Security and such, and that's looking pretty grim, especially for my generation, millennial generation, and even Gen Z, right? And so I've been really just thinking about that and just kind of doing some education with some peers of mine around that, like, hey, I don't think this won't look like how it looks today for us. So you have to prepare yourself and you have to be able to fend for yourself, and a way to do that is gold.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here with Darrell Thomas of the Money Level Show and VRIC Media. Darrell, thanks for coming back on the show.
Yes, good to see you. Good to see you. Being in this space for a long time, the last 5 years, and just watching your show and even some of our other colleagues that do this content creation to bring the value to the viewers, tapping into the brilliant minds of the folks that we interview and such. It's been like an amazing journey, and even just seeing where we're at today, it's exciting.
I hope there is a slow passing of the baton, and it's fun to be a part of this.
Yes.
Okay, let's start out like I always like to. What is your macro view of the world economy and financial markets today?
Yeah, so world economy, obviously, and a lot of turmoil. It's driven by a lot of headlines and such. And so whenever you're able to get underneath the hood of things, when you're looking at tariff policies or you're looking at global relations and things of that nature, I think that we're seeing some big shifts. You're seeing the East start to collaborate a lot more, whether that be India, Russia, China, and such, the BRICS nations. And then the West has kind of been fragile, especially with the U.S. relationships with the EU and such. And so that's been kind of interesting to watch those dynamics. So it seems like the global economy that's based on like a lot of the trade and such and the relations that we've had for decades is really in shambles, or it's cracking. And so that's kind of been my view on there. And then as far as like when we get to the U.S., domestically, just looking at our national debt over 38 trillion, the deficit spending continues to increase. Interest on the debt is still pretty high, right? Just all of these different things, right, that I think really shows like, okay, how are we going to fund entitlements? How are we going to fund onshoring? All of those different things. And I think that there's going to have to be, hundreds of billions and trillions that's going to have to be printed to fund these subsidies, fund these entitlements, as well as our initiatives with trying to bring on natural resources and reshore manufacturing and things of that nature. So that's kind of been like my the most biggest themes that I've been thinking about and how I position myself.
Okay, so you basically see that there's even more of a bifurcation between the East and the West.
Yeah.
And you just see that gap getting wider. And also, when you take a look at the U.S., you see massive entitlements. How are they going to pay for this? And I think we both know they're going to print it.
Yeah.
That's how they're going to pay for it, which should cause a lot more inflation, which should be good for a lot of our investments. Okay, that goes into my next question here. Gold. What do you see with gold right now?
Yeah, so obviously, gold, kind of hit this resistance against, it was close to 4,400, 43 and some change, right? And I think that ultimately, like, gold's going higher. Obviously, the dollar is pretty much toilet paper. They're going to print more, it's going to lose more value and such, and you have central banks that continue to buy gold. You have investors getting behind the debasement trade. You even have investors and average people in the East that are continuously buying. You have multiple big institutions that are coming into gold. Morgan Stanley, the CIO there, said 20% gold. BlackRock mentioned gold being a hedge against inflation, as well as when interest rates drop, money's going to get easier and cheaper. We see that the Fed is stopping quantitative tightening. So there's so many like tailwinds for gold. Even when we look at the amount of like ETF inflows from the World Gold Council, so it just really shows that gold is going to outperform. And I think that even one thing that I'm thinking about right now is the tokenization of gold. So we've had a lot of companies kind of come out and say, hey, we're putting gold on the blockchain, or we're tokenizing it, Tether being one of those. and Tether, taking huge stakes into Gold Royalty as well as Metallo Royalty and even Elemental, Alcis Elemental. So I think that this is kind of like a new way of thinking about gold. It's the tokenization of it. Obviously, some folks are like, if you don't hold it, you don't own it, right? But just thinking about um, the argument, even when we look at like Bitcoin versus gold, like obviously Bitcoin has been like, oh, you could take a 12-word passphrase, across international lines, and you don't have to report it and all of those different things. And how are you going to take these heavy amounts of gold, across international lines, right? Now the tokenization of gold kind of gets you access to like, okay, you can hold a token that gives you access to, 1 ounce of gold that you can demand on delivery or whatever, right? And you can go across state lines and still have that access. There's still some counterparty risk there, but I think it's very innovative when we think about the yellow metal. So I think there's a lot of innovation around gold as well as obviously the debasement of the currency and such. That's going to be a driver for gold going higher.
Okay. All right. So the fundamentals, you see a lot of tailwinds. That's a really good point with gold too. Tokenization, if they can do that, then maybe we can actually use it as a currency.
Yep.
Instead of like nobody's paying for groceries with a gold coin or with a silver coin or something. You know what I mean? Yep. But if they can tokenize it, one that is accepted by the masses, then that could actually be something.
Definitely. Because I was thinking about Tether and some of the companies like StreamX and such that are looking to tokenize it. Because even for me, like I hold gold, but it's like, okay, I want to diversify that because I'm like, okay, I think I got a little bit too much gold in my house.
Yeah.
So how do I begin to diversify? Whether I get into a gold IRA, whether I begin to, buy a token, one of Tether's tokens tied to gold where I can demand it and they hold it or whatnot. So, I mean, there's risk in everything. And, obviously holding it all in your home, like that creates a significant risk as well. So, I think that, I think it's important to factor that in, whenever we're thinking about managing risk. So.
Yeah. Good point. Any profit taking that you've been doing lately?
Yes. So I had Rick on the show multiple times in the last couple of months, and Rick mentioned that he was taking some profits.
Yeah.
He mentioned that many of these juniors and was getting flush with cash, right? And many investors were coming in buying the stocks, and he said that they're moving about 18 months ahead of his target. And so just having interviewed Rick in the past, even on uranium, right? We've seen this multiple times in uranium, where uranium stocks would outperform and Rick would take profits, like back in 2021, 2022. And he's like, it's getting ahead of itself, right? Just thinking about the move in gold over the last couple of months, that was very fast for the yellow metal. And I just think that gold doesn't move that fast typically. I mean, $1,000 in the span of 3 months, like
that's pretty
gold
nuts.
does not move that fast, right? And so I think that obviously there was a lot of FOMO, euphoria. It was getting euphoric, and it needed to cool off. And so for me, obviously not selling my physical metals, but taking some profits on the stocks was important. And being able to rotate that into either some of the bigger names or whatnot, I did kind of. So I took some profits. And I did rotate them a little bit too early into some of the majors, because then the majors, did see a dip.
They had a little dip,
Wheaton Precious Metals, like and some of the other ones, right? They saw a dip. So I was like, dang, I took the profits, but I kind of rotated too quick. But I still was able to, exercise some take advantage of some other opportunities with some of those profits too. So, I didn't just put them all back into the majors or whatnot. But I think it was good for me, because when I did see the correction, it was okay. I knew this was coming based on some of the brilliant minds we interviewed, saying that the price is moving too fast. Looking at the technical charts as well, right? It was getting overstretched.
Oh yeah.
And such, and so I was able to take some profits for sure.
Yeah. Okay. Awesome. What did you rotate it into? You mentioned some of the majors and some other stuff. What did you? What'd you put it into?
Well, I did buy this gold watch.
Nice.
That was one thing I rotated some of the profits.
Good for you. Pick yourself. Yeah.
And then also just, I mean, mostly some of the majors, like looking at like a Wheaton precious metals. Okay, if I can de-risk my portfolio from some of the juniors, take some profits on some of these juniors that are running up 3x or whatever.
Yeah.
Right, and then rotate it into something like Wheaton or Royal Gold or Franco, right, and just kind of de-risk it. I think. So those were some of the companies that I was eyeing and that I took some positions in. I think also just looking at how uranium has been moving as well. So uranium shot up significantly. I took some profits there too.
Yeah,
right?
me too.
Yeah. And it just because it shot up too quick. Some of the stocks were just like okay, 23% in a day.
Yeah.
Right. That was a lot. And so.
Typically takes years to do that.
So I was like, okay, thank you, market, right? I appreciate this gift.
Yeah.
And so took some profits there, and then I am parking some in cash. Like I do have some. I was watching Lobo talk today about parking some of his profits in the cash as well, just because there's the markets are just getting stretched. Like the S&P. Nvidia's a $5 trillion company now.
Yeah.
These stocks are just not stopping, right?
Yeah.
And I'm kind of wondering, okay, I think there's going to be opportunity, whether there's a market correction, crash, however you want to frame it. There's going to be some opportunity there, and you got to have some dry powder to be able to take advantage of that.
Yeah.
Even if gold, let's say gold drops along with the broader market, it drops to 3,500, 3,000, whatever, right?
Yeah.
I want to be in a position to be able to accumulate some more. Right?
Okay.
And so I have been parking it into some cash because I think the markets are getting very overstretched.
Okay. Okay. All right. So you're not necessarily buying I don't know, nickel companies or something. You're basically storing it as cash, expecting a little bit more of a correction.
Yeah, and de-risking with some of the majors that have sold off. So getting in there.
Okay. You interview a lot of guests like I do, even more so now that you're on with Jay. What are you seeing generally from your guests? Like if you could summarize what some key points from the guys that you're interviewing, how would you put it?
Yeah, majority of the folks that I interviewed are talking about the currency reset. Okay. Gold revaluation, how that's in the cards. And so at first I thought it was just kind of pie in the sky, like, okay, this is bullish, and everybody wants to hear the bullish news, right?
Yeah.
But the Fed, the article that came out from the Fed, and just even other dynamics, like from talking with Andy Sheckman and such, Lynette Zhang, just being able to see, like, okay, this is actually in the cards, right? The debt exploding and everything, right?
Yeah.
And why not just, if the gold is in Fort Knox, why not revalue it? From what is it, still at 35 an ounce in the vaults?
Oh, I think it's 42.
42 an ounce.
Yeah, whatever. It's something ridiculous. Yeah.
Why not revalue that to $50,000? $50,000 gold, right?
Yeah. That could solve a lot of problems that way, right?
And so, that's something I think is something that's in the cards. And so, just thinking about just how are we going to get out of the situation? I do have my criticisms of President Trump, but I also have, I give credit where credit's due, that he's actually looking at ways to resolve this problem. And so whether we agree on how he resolved the problem is one thing, but like to see that, okay, this is a problem, like the first recognition of that, that's very important. Like we can't just keep going blindly and just printing massive amounts of money and thinking that we're the nation that we once were, right? Yeah. That's not realistic. So I think that ultimately, market's overstretched, so there's risk of a major correction. I think there's potential for gold revaluation, and then also just being able to protect yourself, make sure you're protected against whatever happens, because I do think we're in like some kind of uncharted territories, and people are trying to figure out what's going to happen next. But one thing we know for sure is that the debt and deficits are going to continue exploding, like they have been. So
I've been kind of thinking the same thing. I too have been hearing that, and I also thought that it was this Never Never Land fairy tale stuff about revaluing gold, but it would make a lot of sense on paper for them to do that.
Yeah.
You know, so why not?
Yeah.
You know what I mean? Like you said, it's at $40 or whatever it is right now. If they just magically write in that it's 15,000, that would kind of give them, I don't know, something more to borrow against. Or
Yeah. Agreed.
Yeah.
And there's been some speculation that who's buying the gold? Like, is the United States actively engaging in gold buying? And that's a question that has been brought up here at the New Orleans Investment Conference. And so I wouldn't be surprised. I mean, well, I would be surprised if the United States is buying gold. I would be surprised. Let me clarify that. Okay.
Yeah.
But just thinking about there was mention of the gold audit. A lot of the Google searches and everything. There was a significant surge in people searching the Fort Knox gold audit, and then it just falls off the cliff and just disappears. Like, okay, well, why is anybody talking about it anymore, right? And so there's been kind of some speculation, like, okay, is the U.S. did they audit the gold and it wasn't there, and now they're purchasing, or what,
Yeah.
And so I don't know. It's fun things to speculate on,
Yeah. Interesting. Okay. I didn't know that. Danny's real good from Capital Cosmic, keeping track of those Google trends and stuff, and it sounds like you like doing that too.
Yeah.
All right. What commodity are you bullish for next year, 2026? What's your favorite one?
I mean, favorite one's gold.
Okay.
I mean, it's just gold is always going to be the top favorite, but I would say for maximizing gains, I mean, we've seen obviously uranium. I think uranium still has some room to move higher. I mean, the equities moved a lot, but the spot price, I think I forgot where it's sitting at today or whatever. I haven't looked at the charts.
82,
82,
I think, something like that. Yeah.
I mean, it went up above $100, and then it's corrected. It's still been corrected, but the equities have like outperformed the commodity itself. And so I've been looking at uranium. I've heard the copper be mentioned multiple times, and I haven't done like a whole lot of due diligence there to just really dive into that and say, okay, I'm ready to put a big position in copper. Obviously, if we're going through a recession with the amount of job losses, I think Amazon, I think they may have cut 30,000 jobs. UPS cut multiple amounts of jobs. Shut down, people losing their jobs and government jobs and such. And so, and then we had the big revision back in August or September of those job numbers over the past year. So the question about are we in a recession or whatnot keeps appearing its ugly head.
Yeah.
So in that situation, like, okay, is copper going to go through a correction and then we get in or whatnot? And so those are some thits that I'm thinking about. One big thing is the silver shortages. With the amount of our output has not met the demand. There's lower grades coming out of the mines. Our output from the mines have not met the demand. And for those that don't know, silver is a byproduct of the mining of these other metals, right? Gold, zinc, nickel, copper, all of that, right? And, the industrial demand has increased so significantly that they are demanding the physical metal, and they're willing to pay the spot price, pay over for the spot price than what the futures contracts are saying, which is backwardation. So I've been paying attention to that, and I think that this is like the real silver squeeze. It's not just retail investors coming in and buying up silver or whatnot. This is like, okay, we have so much demand for silver in multiple different industries, and that demand is continuously increasing. And over the last 5 years, our mine output has not met the demand. Even recycling has not kept up with that demand. So that's something that I could see silver hitting triple digits.
Yeah.
So that's something I'm paying attention to, and there's a lot of pressure in that market.
Okay. All right. So your number one pick is silver?
I would say silver, yeah.
Okay. All right. Silver.
If I got to pick a number one, it's silver.
It's silver. Okay.
Gold has my heart,
Gold. Gold's got you. Okay. Now that's what you're most bullish on. What are you most bearish on for 2026?
Most bearish, I would say. I've been monitoring the rare earth situation, and and it's so driven by headlines, so driven by these emotional decisions, whether there's going to be tariffs or not, or what's the relationship between United States and China. China puts export controls on, and then they agree to ease some of those controls, and so it's just so volatile, right?
Yeah.
And it's like, okay, well, this is a necessary metals for military, phones, electronics, like we're recording on right now, but for a while it was tight, and you saw like these stocks, any stock that had rare earths in it, could just go up. I mean, I did some speculation in USA rare earths. When it was $9, it went up to about $40 something, and then it's corrected significantly since then. So, I think that there's probably potentially some headwinds there, even though I think the agreement between the U.S. and China is only for a year.
Yeah.
So these things could percolate again,
Yeah.
right? Or let's say someone chooses not to honor an agreement, like like stuff with Israel and Hamas, right? Let's say something like that happens, right? These stocks could go higher, but I just think it's a lot driven by headlines and the emotions of global leaders, and so I'm not too convicted on it, even though I think it's a long-term play. Like, it's going to take years to bring this stuff online, but many people chased it up, and right now we're seeing like a big pullback. So I would say long-term bullish. In the next year, probably bearish.
Yeah. Mm-hmm. That's a very good point. I might be guilty of that because I heard of the rare earth play, and I've been watching it for about a year or so, and I recently took a small position. But you're right; it isn't hated anymore by Rick's definition at all. It is beginning. I wouldn't say it's loved at all, but it's people are aware of it, and it's in the mainstream headlines. It's almost like a bet of like you're betting on global conflict. Because if there's going to be global conflict and China controls 90% of the supply, the other nations can't necessarily go to war unless China says so, right?
Exactly.
So it's almost kind of like a bet on global conflict. Mm-hmm. I didn't really put that together until right now.
And then I would say just another commodity I've been looking at, oil.
Okay.
Which I don't
bearish
have.
Or bullish?
It's hard to say.
Okay.
I'm bullish long term. As far as near term, I'm not sure. Recession fears, the price has been under pressure and such, and then it has a lot of these headline kind of things as well. But looking at the gold to oil ratio, being significant, as well as it's being one of those commodities that's not really being paid attention to. Like, not a lot of people are raving about oil, right? And so as a contrarian, it's like, okay, I think there could be some opportunity there. So I have been, just kind of building positions there, but I don't necessarily have an outlook one way or the other. I'm just waiting to see if, eventually, the price corrects and reverts to mean or whatever,
Okay. What's your favorite oil company?
Favorite oil company right now? I'm mostly invested in like Schlumberger.
Okay.
Oil tech and the technology that they produce around oil. I've also been into some offshore companies like Noble Energy, and then some of the midstream transporters and such.
Okay.
So those are some of the companies. They pay really good dividends, like Enterprise Products. They pay 6-7% dividends. So it's a way that I can compound and such. And so I've just kind of been playing around the margins and such. I haven't gotten into like any junior oil companies or anything like that. I think I would just freaking lose my ass, right? So I'm trying to just play it safe, but just knowing like, okay, there could be some headwinds, but there could also be a catalyst that drive it, significantly higher. So
okay. All right. And companies here, any have your eye?
So I've been. I haven't had the chance to really get around to see everybody that's here. There are some companies that I'm actively investing in already that I've already got positions in, like Empress Royalty being one of them. Obviously, Uranium Royalty, Uranium Energy Corp. They're here being represented, and a few others. But just thinking, I'm looking at Dakota Gold.
Okay.
Why I'm looking at them, I'm still trying to. Well, one of the biggest things is betting on the CEO, Rob Quartermain.
Yeah, Robert Quartermain is tough to bet against.
Yeah, and I mean, he owns, I think, 7% of the company or whatnot. They have some big institutional investors there, BlackRock, Fidelity, and some others that are shareholders as well. And just thinking about Bob Quartermain, I mean, Rick Rule mentions him all the time, and he's made Rick a lot of money, based off his work. So I'm doing my due diligence around them, and that's probably someone that I'm looking at. So
okay,
but hopefully this doesn't come out and somebody gets to it before me, and it runs the price up or something, right?
There is usually a spike after these conferences,
So I may need to take a position now just in case, right? But no, I'm looking at Dakota Gold, so that's one I got my eye on.
Yeah. Okay. All right. Any final thoughts? Anything I should have asked that I didn't? Where can viewers find you and your work?
Yeah. No final thoughts, really. I mean, I do have a few final thoughts, depending on where you're watching. I mean, obviously, in the U.S., we got some major issues that we have to work through with the debt deficits. I've been doing a lot of studying on retirement insecurity as well as Social Security and such, and that's looking pretty grim, especially for my generation, millennial generation, and even Gen Z, right? And so I've been really just thinking about that and just kind of doing some education with some peers of mine around that, like, hey, I don't think this won't look like how it looks today for us. So you have to prepare yourself, and you have to be able to, fend for yourself. And a way to do that is gold, protecting your hard-earned dollars against inflation and the devaluation of the currency. So that's something that, I've been touting, especially for friends and family, just making sure they understand that. But where people can find me, they can find me on VRIC Media, which is the Vancouver Resource Investment Conference. We have a YouTube channel where I'm the primary host there, along with Jesse Day, who does panel interviews on our show, and he does some awesome work there too. So you can find me there. You can also find me on the Money Level Show, which is my own channel, where I produce content there as well. So always happy to connect with folks and answer questions whenever I can. And so feel free to connect with me there.
Awesome. Yeah, I like what you say. I think our parents were really good at voting themselves a whole bunch of really cool benefits with no way to pay for them.
Yeah. I mean, like, we voted in tax cuts, right?
Yeah.
And it's like, okay, I mean, tariff revenue is not going to cover these massive 100 trillion off balance sheet liabilities, right?
Yes.
Tariffs aren't going to cover that. So it's like, it's
right
something we got to reckon with.
Got to pay the piper eventually. The best way to defend that is gold, and we will put all your links down below.
Yeah, for sure.
Darrell, thank you for coming back on the show.
Yes, indeed. Yeah, thank you.
And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.